Let's talk about Brazil. It's one of the world's hungriest import markets, no question. But today, we're not just going to look at what this South American giant is buying, we're going to look at how one, kind of unexpected, nation completely cracked the code and saw some explosive growth. Their success story is basically a blueprint for anyone looking to get in the game.
So, let's start with the sheer scale of the opportunity here. In 2024, Brazil spent a staggering $278 billion on imports. Now, that's not just a number on a slide. It's a massive market of over 213 million people who are actively looking for goods from all over the world. It's huge.
Now, while all the global giants are fighting for their piece of that $278 billion pie, one much smaller player is, well, quietly making some huge gains. Just last year, one country saw its exports to Brazil jump by 26%, and that country? It's Bangladesh.
And that, right there, brings us to the heart of what we're talking about today. How on earth did Bangladesh pull this off? And more importantly, what can their strategy teach any exporter who's trying to crack this really lucrative market? So yeah, let's use their story as our blueprint.
Okay, so to understand how Bangladesh found its opening, we first need to see the entire playing field. What exactly is Brazil buying with all those billions of dollars?
Well, Brazil's shopping list is really led by industrial goods. You can see the biggest slice here, almost 15%, is heavy machinery for their farms and factories. After that, you've got mineral fuels, electrical equipment, and vehicles. And what this tells us is that Brazil isn't just buying for its people, it's buying to power its entire economy.
So who are the big players here? Well, no big surprise, China is in the lead, supplying about 22% of Brazil's imports, with the United States right behind them. And yeah, they, along with powers like Germany and Argentina, they pretty much define the competitive landscape. But this is where our story gets really interesting, because there's always room for a nimble, agile player to carve out their own niche.
All right, now let's zoom in on that success story. Because, honestly, the trade relationship between Bangladesh and Brazil has been nothing short of explosive.
I mean, just look at this growth. It's been staggering. In just a couple of years, exports from Bangladesh to Brazil shot up from $109 million to nearly $187 million. You know, that kind of acceleration just doesn't happen by accident. It means Brazilian buyers have found something they really, really value.
So what's the one product driving this whole boom? Well, it's pretty much all down to one single sector: ready-made garments. We're talking apparel like t-shirts, denim, jerseys. These are the hero products here. They perfectly met Brazil's demand for affordable, quality fashion.
But the story doesn't end with t-shirts. The real lesson here isn't just about what Bangladesh has already done, it's about what comes next. And for any exporter listening, this is where the golden opportunities are hiding.
Think of it like this. The garment boom cracked the door wide open. Now the real opportunity is to walk right through it by looking beyond the t-shirt to all these other sectors where Brazil has a need and, exporters have a strength.
Take jute, for instance. Brazil is seeing this big rise in conscious consumption. Consumers are actively looking for sustainable products. And guess what? Bangladesh is a top global producer of this biodegradable fiber, which is perfect for eco-friendly bags and packaging. It's a perfect match of supply and demand.
Then you have pharmaceuticals. Brazil imported over $7.8 billion worth in just 8 months last year alone, and Bangladesh has a world-class pharma industry. Now, the key hurdle here is getting regulatory approval from Brazil's health authority, Anvisa. But when you see the size of that prize, it makes it well worth the effort.
And the list just keeps going. High-quality leather goods, world-class ceramic tableware, even processed foods. These all represent areas where exporters can diversify and really capture new market share in Brazil.
So, the opportunity is clear, but how do you actually make it happen? Let's break it down into a practical playbook for actually entering the Brazilian market.
The whole strategy can really be boiled down to 4 key steps. It moves you from digital research all the way to a personal connection. So, it starts with finding buyers online, then you transition to networking in person, then you have to know the local rules, and it all wraps up with the most crucial step of all: building trust.
For those first 2 steps, you have some really powerful tools. Online platforms like B2Brazil are literally designed to connect you with importers. But let's be honest, nothing beats that face-to-face interaction at major trade shows like Fabretex for textiles, or a dedicated event like the Made in Bangladesh exhibition in Sao Paulo.
Okay, step 3, knowing the rules. This is absolutely crucial.
And the most important rule is tariffs. Brazil can have really high import duties. We're talking up to 35% on apparel, so your pricing has to account for that. But, and this is a big but, you've got to watch for policy changes. There's a potential trade agreement being negotiated that could literally slash these costs overnight.
And all of this leads to the final and maybe the most important step. Business in Brazil is built on personal relationships. It's not just transactional, it's about genuine trust. Taking the time for a face-to-face meeting, even if it feels a little inefficient, can become your single biggest competitive advantage. It really can.
So, what does the future hold? Well, all the signs are pointing to this trade relationship getting even stronger, and there's one major development on the horizon we need to talk about.
Both sides are actively working on something called a preferential trade agreement with Mercosur, which is South America's main trading bloc. If this gets signed, it would slash tariffs and tear down trade barriers, making it way cheaper for goods to flow into the region. It would be a true game changer.
Which leaves us with this one last thought. We've seen the demand, we've seen the untapped opportunities, and we have the playbook for success. So if the biggest financial barrier, those tariffs, is lowered, the stage is set for an even bigger boom. The only question left is, who's going to be ready to seize it?